If you look at Hero MotoCorp and Honda, both of these large players have lost nearly 100 basis points in market share on a year-on-year basis for FY19. More importantly, if you look at the smaller players, especially in the market share on an overall basis, including scooters, there also Bajaj Auto has been able to get better market share. Bajaj Auto's overall market share has improved by nearly 230 basis points as far as the entire two-wheeler industry is concerned, and this is thanks to the dwindling sales of the scooter segment. And in FY19 we have seen the overall scooter share decline on a year-on-year basis, and this has happened at least in the last 5-7 years, wherein the first time we have seen slowing scooter sales. Motorcycle and moped sales have been increasing on a year-on-year basis when you compare FY19 versus the levels of FY18, and the screen on your charts clearly shows that we have seen some slowdown in the scooter segment. What has also done better is Bajaj Auto post the festive season, and the graph on your screen will clearly show that how post November we have seen Bajaj Auto sales pick up significantly, wherein other players like Hero MotoCorp have seen decline in sales. TVS somehow has been able to hold on to sales, but Bajaj Auto is the one which has seen a consistent double-digit growth in the domestic market as far as the motorcycle business is concerned.
Yatin, thanks so much for that analysis. The Supreme Court has ordered a status quo on the Essar Steel insolvency case. The two-judge bench, headed by Justice Rohinton Nariman, has stopped ArcelorMittal from making the payment to Essar Steel lenders to take over the company. The Apex Court has directed the Bankruptcy Appellate Tribunal to decide on the appeals expeditiously. JSW Steel is among the bidders who have faced repeated delays in their attempts to buy stressed assets under the insolvency regime, and the company's joint managing director says the bidders cannot wait forever. In a conversation with Bloomberg News, Sheshagiri Rao points to the difficulty in keeping the funds ready indefinitely. PR Sanjay now joins us with the highlights of that conversation. Sanjay, what was his perspective?
This is the other side of bankruptcy procedures. As Ikra rightly pointed out, at least 68% of the total cases has exceeded either 270 days, and some of the cases already exceeded 500 days limit. So this is really crazy. So what JSW Steel management is telling us that the holding, this is testing their holding power, because for any bidding, you'll have to arrange the fund and you'll have to hold the cash just indefinitely. So there's a borrowing cost attached to it, and this is the other side of like how bidders are facing it. You know that they've already bought the Monnet Tispat, and they have been waiting for Asian Colors, and they entered later for the Essar Steel race. But this is the other side, which clearly signaling how difficult it's going to be for the bidder side. Of course, there are other problems attached to bankruptcy, but this clearly signals a worrisome picture.
No, absolutely, and Arcelor will probably face the same concerns. Sanjay, thanks so much for that story. Let's move on to the NBFC space. Faced with the liquidity crunch and high borrowing costs in India, non-bank lenders are increasingly raising money through public bonds, but retail investors may not be completely aware of the risks they're taking on. Rananjoy Majumdar of Bloomberg News joins us with the details. Rananjoy, it's been going on for a while.
Yeah, hi, thanks. So what we're seeing is that public bond issues by NBFCs in FY19 was the highest in at least a decade. And what this means is that NBFCs are increasingly trying to attract more and more retail investors for their debt. And this is in the face of a continuing tight liquidity situation that they've been facing in the money market, where institutional investors like mutual funds are demanding very high interest rates to lend to them. And so there are, really two big reasons for NBFCs to try and tap retail investors. One is to really diversify their sources of funding, rely less on banks and the institutional side. The other is that while in the past this channel seemed relatively expensive, now with institutional investors demanding very high interest rates, it looks a little bit relatively less expensive. Now, on the other hand, for retail investors, a lot of care should be taken in making these kind of investments, and they shouldn't just be swayed by the high coupon rates or what looks like a good rate of return that's on offer. So the starting point is definitely to look at the credit rating that NBFCs may have, but beyond that, retail investors need to pay attention to the quality of promoters and NBFC's track record, and also things like the kind of liquidity they may have access to, as well as factors like the kind of kind of sectors that the NBFC may have exposure to in their loan book. So all of these factors need to be taken into consideration, and that can be a bit difficult for an individual investor to keep track of.
Absolutely. Ranjoy, thank you so much for joining us with those details. Meanwhile, lending to small businesses is growing at a faster pace in India as financial institutions increasingly try and tap into the credit gap that has existed for years. A report by TransUnion, CIBIL and SIDBI indicates over 19% growth in outstanding disbursements to micro, small and medium enterprises. But that's not all. They've also pointed out in the report that there is an increasing proportion of outstanding credit to the GVA, that's the gross value added generated by the SME sector, which could raise some red flags. Pallavi Nahata gives us some insights from that report.
Outstanding disbursements to MSMEs have grown at an annualized rate of 19.3% from December 2013 to December 2018. This was according to data by MSME Pulse by TransUnion, CIBIL and SIDBI. As per the report, lending intensity rose to 47.6% in December 2018 from 32.2% in December 2013. Lending intensity was measured by outstanding MSME loans as a percentage of gross value added by MSMEs and was particularly steep since December 2016. The report noted that this could be an indication of a buildup of stress in the segment and needs to be further monitored. According to the report, lending to individuals who are often